The standout highlight from Meta crushing earnings today for Q1 2025 earnings report, released on April 30th, 2025, is the significant earnings per share (EPS) beat coupled with strong revenue growth. Meta reported an EPS of $6.40, surpassing Wall Street's expectations of $5.20 by approximately 21.7%. Revenue for the quarter reached $42.31 billion, exceeding analysts' forecasts of $40 billion by about 2.2%. Stick around as we unpack the key support and resistance levels, the fundamental catalysts, and what options traders were pricing in heading into this report. This performance underscores Meta's robust advertising business, which saw a 16% year-over-year increase in sales, driven by strong demand across its portfolio of apps: Facebook, Instagram, WhatsApp, and Messenger. Additionally, the company's 41% operating margin reflects improved operational efficiency, bolstered by cost-cutting measures and a focus on high-margin advertising revenue. The surge in Meta AI's adoption, nearing 1 billion monthly active users, further signals that Meta's heavy investments in artificial intelligence are beginning to yield tangible results, enhancing user engagement and ad monetization. It's up over 5% as we speak, but does this move have legs, or will the post-earnings euphoria fade by morning? Let's kick things off with the numbers. Meta reported revenue of $39.1 billion, slightly ahead of estimates, and EPS came in at $5.62, crushing the street's forecast of around $4.70. Most of that beat came from lower-than-expected CapEx and stronger Reels monetization. Daily active users climbed, and ad revenue is stabilizing despite macro headwinds. One key note: Meta's Reality Labs division continues to burn cash, but for now the market is willing to overlook that, likely because of improved guidance. Now, here's where it gets interesting. Meta announced a $50 billion buyback, which is a huge vote of confidence from the board. Coming into earnings, options were pricing a 7.2% move, and so far we've seen a 5.5% spike after hours. That's under the implied move, which usually means one thing: IV crush. Option premiums, especially weeklies, are likely to get absolutely smacked tomorrow, even if the stock holds its gains. If you're an options trader, this is one of those spots where buying after the move becomes high risk. We'll talk about smarter entry points next. Let's break down the chart. Post-earnings, Meta spiked from $5.49 to $5.78.39. That lines up almost perfectly with the R4 pivot on the 5-minute chart. Resistance to watch, $5.80. Post-earnings spike high, $5.86.93. R5 level, $5.90. Psychological round number. Support levels, $5.64.16. R2. First likely retest zone, $5.51.71. Daily pivot. And pre-earnings close, $5.45. Unfilled gap and potential bounce zone. The short-term uptrend remains intact above $5.51. A break below that tomorrow could lead to a retrace to the 540s. And don't forget, back on the daily chart, Meta is still under its 200-day moving average at $577.91. And that's going to be a magnet for both bulls and bears. So what's the best way to play this? For swing traders, waiting for a pullback into 545, 551 offers the best risk-reward. For breakout traders, a clean move above 586 with volume opens the door for 590 to 600. For options traders, watch out for IV crush. Premiums on both calls and puts are likely to collapse by mid-morning. If we see continuation above 580 and tech stays strong, I wouldn't be surprised to see a move into the 600 zone by the end of the week, but it needs momentum. Meta's Q1 2025 earnings provide a solid foundation for its future performance, but the outlook is shaped by a mix of opportunities, challenges, and strategic investments. Meta projects second quarter revenue to be between $42.5 billion and $45.5 billion, with the midpoint $44 billion, aligning closely with analyst expectations of around $44.03 billion. This guidance suggests continued year-over-year growth of approximately 12–18%, driven primarily by Meta's core advertising business, which accounts for 98% of its revenue. Advertising momentum is ramping up. The 16% year-over-year sales growth in Q1 reflects Meta's ability to capitalize on strong digital ad demand, particularly in regions like Asia-Pacific, despite a slight shortfall in ad sales at $8.44 billion versus $8.54 billion expected. The company's advancements in AI-driven ad targeting and content recommendation algorithms continue to improve ad monetization, especially for short-form video content like Instagram Reels. Analysts expect Meta to maintain double-digit ad revenue growth through 2025, with projections of 12% compound annual growth over the next 5 years, fueled by increasing average revenue per user and steady user growth. Meta's aggressive investment in AI infrastructure is a cornerstone of its long-term strategy. The company reported nearly 1 billion monthly active users for Meta AI, its generative AI chatbot, highlighting rapid adoption. AI is enhancing both user engagement, e.g. through personalized content, and advertiser value, e.g. via automated ad creation and targeting. The open-source Llama large language model is noted for its cost efficiency and is expected to drive further innovation in ad content generation and app development cost reduction. Meta's stock surged over 5% in after-hours trading on April 30, 2025, reaching approximately $588, reflecting investor confidence in the earnings beat and stable Q2 guidance. However, the stock is down 8% year-to-date in 2025, having lost value since hitting a high of $740.91 in February amid tariff-related market turmoil. Meta's Q1 2025 earnings report showcases its resilience in the digital advertising market, with a stellar EPS beat and robust revenue growth, driven by AI-enhanced ad tools and strong user engagement. The company's forward-looking guidance for Q2 2025 and its increased AI investment reflect confidence in long-term growth, particularly in monetizing AI-driven services like Meta AI and Llama. However, rising capital expenditures, regulatory challenges, and macroeconomic uncertainties pose risks that could temper near-term profitability and stock performance. Analysts remain largely bullish, projecting sustained double-digit revenue growth and potential stock upside, provided Meta can demonstrate tangible returns on its AI bets and navigate regulatory headwinds. Investors should monitor management's commentary on AI monetization, regulatory developments, and ad demand trends in upcoming quarters to gauge Meta's ability to maintain its competitive edge.